Good evening, everybody. Welcome to this evening's ACY Securities webinar, a review of the recent Forex trading patterns, my top trading setups. My name is Duncan Cooper. Welcome to this evening's webinar. So before we get into it, just read through the risk disclaimer. So while you're reading, tonight's webinar is all about what happened last month. I'm going to look at market structure. I'll look at some of the patterns that I've been teaching you. And did you see them? Could you see them? Why couldn't you see them? You know, the more that you'll review the market in hindsight, that can be then become your foresight as you see the market unfold in the next month and the next one forward. So that's what we're going to be looking at. Now, if you don't know me, my name's Duncan Cooper. I'm Senior Market Strategist and Trading Mentor here at ACY Securities. And I'm a full-time trader. I've been trading the Forex market now for more than 15 years, mentoring clients for more than 10. If you want to contact me, my email's on screen, duncan.cooper@acy.com. Through the week, you can connect with me on our website, acy.com. Go to the Market News tab, our YouTube channel, ACY Securities Australia, and you can connect with me on Twitter and LinkedIn, and my personal handles there. As well, in the Telegram channel that we have, you can connect with me in there. Just contact Nathan to get access to that. I'm providing analysis through the week based around what I've been teaching in webinars. If you want to get access to my chart layouts templates, as well, contact Nathan. And coming up next week, if you're an ACY Securities client, then theoretically you can get access to the Inner Circle webinar. Just contact Nathan. That's Monday, 7 o'clock, 8 p.m. Sydney time. So contact him and he will give you a rundown of what's going on next Monday and how you can get access. So just give him a shout. I'll put his details in the chat now. All right, any questions about accounts, upgrading accounts, anything like that, just contact Nathan. He will be more than happy to talk with you. All right, his details in the chat. All right, so tonight's webinar is not about what the market's doing right now, but what did happen last month. And, you know, armed with some information, some knowledge, what could you have done? So let me just bring up my charts. Just going to use my price action chart. Stephen, good evening. And I've got a list of a few that I just want to go through. And what I want to try and get across to you is that for a lot of the time, purpose of this webinar is for a lot of the time, the market's just creating the same kind of structure all the time, same kind of patterns, but can you see that the market's doing that? And often I think as well, if you've been taught a certain way, you may have, when I first started trading, it may be more of like a moving average approach, whatever, an indicator approach. That's okay to get you going, but I think long term, if you want to be able to make consistent results per month, long term, you probably need to look at the market in a slightly different fashion. So if you've been looking at the market with just purely trying to trade the trend using moving averages or just high tops and bottoms without any other understanding of market structure, you might be going okay to start off with, but then, you know, you might be becoming a little bit unstuck, or you're not getting the consistency that you want. So really you have to have an understanding of what is going on from a structure support level, what levels the market's holding to, reversing down from, irrespective of the trend, because trends will stop at support and resistance. So you might be seeing an uptrend and then suddenly it starts going back the opposite way and you still think it's an uptrend, but it's going back down the opposite way. Why is that? It's because it's just stopped at resistance and it's going back down the other way. All right, so let's have a look at the structure on the Aussie yen for last month. And let me just find out where. I'm not going to go through 12 pairs. I'm going to go through about 5 or 6. All right, start of the month was around about here. Okay, so we were coming down. Let's go drop to the monthly chart. We're coming down from a very negative month. Previous month, we actually ran down into more negativity, but then we started to rally. All right, so what I did, don't need that fib on for my analysis tonight. I was looking at potentially that we might we were negative for the month, and I thought we might run down further for the month, but obviously we reversed back up. And whilst this is not, I mentioned this yesterday, whilst this is not a perfect head and shoulder pattern, because this is a high bottom here, it'd be much better if this low here was a lower low. We've come back up to an area of resistance where it could be like a left shoulder, right shoulder, head at the top. Now, over time, we might just, over the next month or two, we might move up through here, but we're just looking at what happened last month. So I had a fib drawn from high to low. I was looking at last month being very negative. That's September. So into October, I was thinking, okay, we might have a retracement back up inside the previous month. So I moved it down to the low that was forming for that month. And then we came up to the 62% retracement. So at the moment, I'm still favoring a continuation pattern to the downside. So I saw this come up to, stopped at weekly resistance over here, these highs. Okay, this high was very prominent. Back in April, we failed, we moved back below, we came back up, failed, moved back down. So we've come back up and we pretty much traded at that level. Now, you could, if you were really aggressive, you could have been looking to trade there, but there were other ways to try to trade to the downside after we held there and traded down that day. That day as well was an intervention day by the Bank of Japan. However, once we held there and you saw that, okay, we had intervention, anywhere coming back up to that area should be looking for an opportunity to sell, because it's been approved level of resistance where we've already had selling pressure coming down from. We may be having a move down, corrective to the 62 for a further move down. So this is an area of resistance. It's that structure. This could be a higher time frame, lower top forming here on the weekly chart. Okay, that kind of structure. So let's drop it down to the 4-hour chart. So we came up. Now we had intervention on this 4-hour candle. We moved down. Now, if you thought logically this is a failure point, you could be looking for a 79% retracement. Okay, so we've got the structure. There's potential of a 79% retracement coming back up for failure to move down once we've had that failure up here on the 4-hour chart. Now, price action has been rather sideways, but the point I want to make to you is if you traded this as a 79% level, life would have been okay, because there was an opportunity here when price came up. Could have been selling there. Stop goes above the high. We haven't taken out the high, so you could have been selling there. We come down. We come back up to the 79% level once more. So you have a third opportunity to trade at that 79% level. And you've had, theoretically, plenty of chances through this area to once again sell at the 79% level. Now, I don't know within this fib structure whether we will ultimately, we've moved down. We've hit the 79% level once, twice, three, at least 4 times. I don't know if, we are going to ultimately move down this way. And it'd be great if it came down to meet the 127 extension target. Doesn't have to meet that target, though, for you to be able to trade in the market and see a profit. All right, so there was at least 3 or 4 times where you could be trading at 79% level, stop above the high. Or you could, trading here at the 79% level with a 100 pip stop. Whichever way you wanted to do it, you could still have been in the market, and you're still waiting theoretically. If you trade at 79% level, stop above the high, you're still waiting to see if this is going to further decline towards a better profit target. But however you may have approached this 79% level. If you have your stop above the high, you shouldn't be losing and you should be seeing profit. Okay, so that's how structure has been forming there in the Aussie yen, how you could have been looking to get in. All right, now I could talk about what price is doing right now, but that's more into this month. I just want to look at what happened last month. You know, the more you can maybe take some screenshots of what happened last month, have the structure set up to what did occur, have them, you know, maybe print them out. The more you see it, the more you're going to see it when it starts happening live, and you can react to what's going on and hopefully, you know, trade to profit. All right, so any questions on that? That's what I've been seeing on the Aussie yen. We may have a much larger, higher time frame structure forming at the moment to the downside, failing at, you know, a major level of weekly resistance across here. All right, I try to structure all my trades that has some form of major structure failure, or, you know, prices rally back to structure. I'm trading at the structure, or we failed at structure. Here we failed at structure, and then there was a rally back up, but that you could have been looking to sell. All right. Whether or not that will actually run out to, you know, a nice result, time will tell. Even though you could be targeting the 127 extension down here on the smaller fib, this is where you can be using a smaller range, still a large, quite large range, but a smaller range within a larger weekly range, trading at around about 95.12. All right, but then on the higher time frame, you could be trying to target down to a larger 127 extension. So trading at 95.12, targeting down here, and let's just call it to the nearest figure level, down to 89. That's like 600 pips away. So there you can create a very good risk reward. If it's 600 pips away, in this example, potentially your risk is, you might be risking 70, 75 pips. Even if you're risking 100 pips, that's a risk reward of 1 to 6. All right. Bob, you're asking me, what do you look at to determine the focus on the 79% fib instead of the 62? Well, I like the 79% level because it offers a better risk reward. So yes, theoretically, I could look at the 62, but the 79% level will offer me a better risk reward. Now, what I like to do, and I haven't talked about it, but there is on the 4-hour chart here, 4-hour resistance just there. So in terms of what fib level would I choose if I was going to choose between the 62 and the 79, the one way that I have resistance overlapping. However, I have taught the pattern where you wait for the rally to the 79% level, because it just structures a better risk reward. But in this example as well, we have 4-hour resistance overlapping with the 79% level at the same time. So that adds weight to that 79% level. But ultimately, yes, if I can get resistance at the 79% fib, perfect. Or sometimes I will just trade at 79% fib, because it's looking to sell a rally where I can create a great risk reward. So I get a better risk reward at the 79% level than I do at the 62. So I'm always looking, if I'm looking in a sell setup, to try to trade at the highest price I can within the fib range, which is the 79% fib level. Okay. But if that lines up with resistance as well, and you had resistance here, so at the time that this was coming up, you might have been looking at like left shoulder, head right shoulder, even though we did pop up higher. So I can't really call this a head and shoulder pattern, but you may have been looking in this area for that pattern at the time, because that could be a left shoulder, that could be a head, and all lines up with the 79% level. All right. All right, Bob, hopefully that helped you. All right, let's move along to another pair. All right, Aussie dollar. Now, I made this statement through the month, but it hasn't been the easiest month in October, but I've just been trying to trade where is the longer term trend. So somebody asked me yesterday about the day chart trend is up, say, on the euro dollar. But the higher time frame trends are down. So I'm looking to structure trade to the downside at the moment because price is rallying back up to higher levels. So I'm always trying to structure, ideally, with the high time frame trend at some form of structure that will assist price to move back in line with the high time frame trend. So on the Aussie dollar, the monthly trend, even though we're a bit buoyant maybe right now, and to the latter end of the month, in October, just pausing because Slavy's saying price might still come back to 95.35 on the Aussie yen. Well, yep, Aussie yen may well come back up still. It's rather range bound here at the moment. This may well come back up to the 95 area or slightly above still and offer you another opportunity to trade because it is seeing very much a range bound market, but it might just be starting to break down to the downside gradually. We'll have to wait and see this week, but you know, still might be opportunities through the course of the new month up at the 79% level here. All right, Aussie dollar. Stephen, you're saying we might see 40 cents. Well, we could do next year. 40 cents is very low, but yes, we could well see 40 cents maybe if things get really bad. All right, so long-term trend is down on the monthly here, right? My bias is to try to trade with that direction, to try to trade with the weekly trend, which is down. Now, this is where the start of the month was on the weekly, this candle here, within this area here. So here we have an area of consolidation forming, but the higher time frame trend is down. Okay, so if I'm seeing consolidation, I just look to trade the consolidation in the direction of my higher time frame trend, right? It's down. Now this consolidation here is this area here. Okay, so the new month started right about here. All right, so we come up, we fail at these 4-hour tops, we come down, we fail once more. So what I'm seeing here, let me just get rid of that line because that line wasn't there at the time. All right, this area here is just creating an area of consolidation. All right, we'll use this top here and we'll use this as the bottom of the consolidation. All right, you know, we false break here. We come back up here now. If you're thinking, okay, we're in consolidation, you can use my fib consolidation trade. You just draw the fib across the range. You could be using that low, or you could be using this low. Either one would suffice, however you're drawing your range in. The trade is to trade at resistance, stops at the 127 extension. Now, if you did that, life would have been good because we ultimately do trade back down to support here. That's where you should be taking your trade off. So we have a number of failures out here. We failed once. We failed twice. So you could have traded once or twice at that level for the opportunity to trade back down to support. Okay, now, whichever one you did, both work out if you're just holding the trade and you've got your stop above the high at the 127R level here. It only needs you to risk no more than 45 pips. You could be targeting support. That would have given you 160 pips at least. And if you thought the bottom of the range would break to a longer move down for the trend of the month, of course, you would have made more. Now, what I want to talk about is these areas of consolidation. These form all the time. Just look to what is the higher time frame trends and look to trade the, you know, if the higher time frame trend is down, look to trade the structure at the top to trade down. I'm not saying it's easy if you're a new trader to try to trade up here. Let me just take the fib off, because the inclination is, if you're a new trader, that you see price break this high here and you think the trend's turning up. But you have to get into your head is, what is this overall structure here? It's the top of a range. So the trend can turn up at the top of the range, but it's just going to hit resistance and potentially then turn around. All right, so trying to see this pattern occurring, because it happens all the time, is going to help you with your trading, because the market is in some form of consolidation 60% of the time. So the high time frame trends are down at this stage, but we're forming some consolidation here before then moving down. All right, we're actually breaking into more consolidation at the bottom. Trend is down, and I might just get rid of that line. So, you know, in this area here, let's just get rid of these lower levels. You know, we come into some area, we start to form some form of consolidation. It's not the best looking area of consolidation. It's very imperfect. But we have all these highs forming. And hopefully you can see that this area of consolidation, let me just draw it in roughly. The next area of consolidation kind of forms underneath the previous one. So we end up with kind of, you have an area of consolidation, we break below, and then we have another area of consolidation form just below it. All right, and often when we break below an area of consolidation, just as a informative piece of information, the height of that consolidation is often where we move down to. See the height of this consolidation, it's almost the same as this consolidation. All right, so the next structure forms, it's almost exactly the same height as the previous one. Now it's not a perfect area of perfect, you know, horizontal here, and it's horizontal here because the highs aren't equal down at the bottom. But see here, you have equal highs. This is fractionally short. Now this would have been a good area to look for an opportunity to sell, just simply trading the top of the range. Put your fib in across the range. You're trading at resistance, your stop goes at the 127 extension. Now price has not moved down to support. All right, but by this time you should have at least managed your trade to break even. Price does come up, you know, theoretically and take you out if you're still in your trade. All right, but there were opportunities to trade, definitely one opportunity there to trade at resistance, to trade down before this rushes up and maybe takes you out at break even. Okay, now if you did trade this range here, well, of course, in this instance, you're wrong. I don't want to get across to you that you're never going to be wrong. So in this, you know, area of consolidation, you know, there was an opportunity to trade there, which would have seen some profit or a break-even trade, depending on how you manage your trade. If you then took the next one, then depending on where you put your stop, if you put it at the 127R that I teach, you would have been wrong there. Okay, so you may have been, ultimately you may have had a losing trade in this area. However, if you are simply trading the trades as they set up, if you took one at the top of this range, that would have been successful. So let's say we make a risk reward of 1 to 3 down here, and you lose one here. Over the month at the moment for the Aussie, you're still up 2. All right, that's the way you have to look at trading. Nothing's going to work 100% of the time. And if you were lucky trading here, if you took the first attempts, hopefully you had a break-even trade, and you're still up your 3. Okay, and if you trade the break of support, you may be more up than 3. All right, so we had 2 ranges there in the Aussie that you could have been trading. And then more recently, getting to the latter end of the month, we had this high level here, which is the high of the month, but it was just forming the high of the month as we're coming back up. 65.47. So that was the high of the month. That was the low of the month or last month. But at the time, we didn't know if they were going to be the final points. But if you're using that range, what did happen in the latter end of the month? All right, we came up to 79% level. You could have been maybe looking to trade the 79% pattern to sell here to move down. But another thing you should have been mindful of is you had this area consolidation here that formed. All right, I'll just roughly draw it in. Is what often happens is you get your consolidation, you trade down. You'll often come up back to the height of the consolidation over here. That can often be the 79% retracements, depending on how things set up. 79% was a little bit lower, but this just really comes back to this same resistance area here. All right, those tops through there, and then we sell off. Okay, now does form here a little bit of a head and shoulder pattern. See the little left shoulder here, head, we run down and we rally back up. That's fraction short of that shoulder, but we get a 4-hour 79% retracement rally back up there. All right, so price hits your resistance area. All right, if you wanted to be aggressive, you could just be selling there with your stop above this area. You could be using the 100 pip stop entry, for example. You could wait for it to fail, so it hits your area, it falls down, you're selling the 79% rally. All right, and selling at 79, stop above the high. I can just get things not to highlight, doesn't matter. This doesn't require too much risk. There's about 30 pips of risk maximum if you just put your stop above this minor high here, selling at the 79% level. If you want to look at it on a 15-minute chart in that area, all right. A few more things are coming together in the area as you start to look at it on the 50-minute chart. There's the left shoulder, there's the head, but we have the 6,500 level at the 79% level. All right, so it's a little bit more, more tools to look at in that area. All right, so you could have been trading at contact, first contact here, top above the high. You could have been trading some form of trend line break to get in. That would have worked. Trading the swing point break, which is here. Okay, stop above that high. That's about 32 pip risk. We've traded down, more than a risk reward of 1 to 2 already from that entry. So number of ways of getting in. You could be selling at 79, trend line break, swing point break. Price has been moving down from that area. Okay. Another entry style that you could have traded would have needed more risk. You could have used a 4-hour entry. You could have been trading the break of that red candle just here. All right, stop above the high. You could have been trading the break of that blue candle just there. Stop above that high. Whichever one you did, it has moved down. It would have been, I'm sure, showing you a risk reward of 1 to 2 approximately. So a number of ways of trading just that area of failure at structural resistance there. You could have traded at the 79% level, stop above this high. You're just waiting to see if, there's last month's range. We've rallied back up inside it to 79. Are we now trading down for the month down that way? Okay. All right, is that all making sense? But it's all coming from, those two, this movement down here this way is all coming from the structure that actually formed late September. And then we headed into October. So there was structure failure here to move down. Same structure failure here to move down once more. Okay. The thing you have to be, though, is just patient for price to move back up to the structure that hopefully you see. All right, let's carry on. Euro yen. Not going to spend too much time on the euro yen, but this is just taking, this was very volatile at the time. So I didn't trade this. And you might say, okay, this is too volatile for me to trade. But the more that you're going to see this, hopefully you're going to have a long trading career and you're going to be, trading as long as I've been trading. I've seen this happen more than once. Is in very large volatility where, in the middle of the month where we had the Bank of Japan intervening. So this was this day and this day. Price will often come to a significant level of support if it's a sell-off. And this really just came down to this monthly resistance level it was. So it's monthly support and daily support here. All right. Monthly support was at 144.26 and we came down to 144. So we came down to 143.68. All right. 2 days there. If we drop it down to the 4-hour chart. Now the overall trend is up on that pair. So this having a very strong sell-off across 2 days, came into the same area twice. If you were wanting to be really bullish and aggressive here, trading that level with a 100 pip stop, whether you traded at monthly supports, daily supports, with all that structure to the left to be supports, price would not have hit your 100 pip stop, and because that only went down around about 60, 70 pips as a maximum. This rallied all the way back up like 350 pips. All right. Now, you may have structured your entry differently rather than just trading the level, but the thing I'm trying to get across to you is if you've got your monthly, weekly, daily support and resistance in, and you know the structure, that wasn't that difficult to see why you might get support there for that bounce back up. All right. I don't know what's going to happen in this new month that we're in. We're obviously selling down at the moment, but this is definitely an area to watch for support once more to move back up. All right. And whilst I'm showing you areas that worked, it's worthwhile showing an area that I traded last month that didn't work. See this area here, 144, where it nicely failed here for a move down, nicely failed here for a move down. I actually traded it here and then it didn't move down. So I don't want to get across that everything works, because sometimes it works for me, sometimes it doesn't. But I was trading structure there to trade down at 144 on a revisit and didn't work. But once we broke above that area of resistance structure, it became support later in the month. All right. So often a significant area of resistance in the same month will become significant support later in the month. All right. Now we may well revisit that this month. Now this could hold, or it could break. Now this level could be support to move back up. It could break through it. It could become resistance for the month to trade down. So quite clearly, this is the area to watch if we keep moving down at the moment on the euro yen. Okay. All right, let's get into euro dollar. Just simple more structure. So the month started around about here. All right. So what I had drawn on my chart was that was the high of the previous month to the low of the previous month. So I had a fib drawn across that range. All right, now let's take a few lines off. The more prominent line, the real line I was working for the month was this line here. And I'll just take that fib off and put it back on in a moment. So let's just have a look at, all I was trying to do for the month was look to sell a rally in the downtrend. Monthly trend is clearly down. Your weekly trend's clearly lower tops and bottoms, right? So I was looking at the time. I had my fib drawn from that top to that bottom. 62 level overlap with that weekly level of broken support here. So weekly resistance at 99.52. All right, I just simply sold it at 99.52. Stock was 100 pips above, and I didn't make the most profit, but I did make some. I did make some profit on this move down. Now, in the same month, we came back up here. If you traded at the same level, let's say you used a 100 pip stop, you would have lost on the second one. All right, so you may have may have made some money on the first one, may have lost on the second one. Well, you would have lost on the second one, unless you put your stop way, way above. All right, so resistance to trade down. In actual fact, you know, depending on what you were targeting, this actually moves down 300 pips. But if you just targeted a risk reward of 1 to 2, you would have made 200. If you took the second one in the same month, you would have lost, but you're still ahead for the month. So I want to, you know, try and get across to you that sometimes the market can be very good, just keeps hitting your levels of resistance, and just keeps wanting to fail and move down. Sometimes it won't work, but you don't know which ones are going to work and which aren't going to work. So if you're trading a certain philosophy of trading down from structure, you just have to keep taking the trades as they come. Now, there was a 79% rally. It also lined up with this level of resistance here. So depending on what you thought the process was for the month, you may not be looking at the same level I was looking at. You may have been looking for a high level. You could have been looking at this resistance level here, or you could have been wrong on that second trade, but you're going, okay, well, okay, I have a losing trade. I still have to move forward. And where's my next trade example? So let's say we took the first trade, we win. We take the second trade, we don't win. The next level to look at was, as price is coming up to the 79 level, look at the 79% level, look to the left, you've got resistance, resistance, resistance all the way through here. So this level, and we did go deeper into it in one of the analysis webinars on imbalances. There was an imbalance here that was getting filled as well. So there was plenty of reasons, other technical reasons as well, but 79% fib, marrying up with resistance, trading that level stop above the high, or trading that level stop above the high is about 160 pips. So maybe that's too much, but trading that level with a 100 pip stop would have worked out fine. It's currently at the moment, it's almost pretty much made 200 pips. So if you were just targeting risk reward 1 to 2, you would have made it. You might be targeting down, back down to support down here. So you're still waiting to see how things run out. All right, so I can see 3 structure trades there. Just pure resistance, well, pure resistance plus the 62% fib, we trade down. Second one doesn't work at the same level. Third one's at the next fib at resistance, and that is working at the moment. Now we can look in these areas on a lower time frame. Here's that first one. All right. So what I can see here is if you wanted to drop this area down into a lower time frame look, there's a 79% retracement in this area. So let's just pull that up on a 15-minute chart. If I can get there. All right, sorry. Time. All right, so this is the area where we first come up to challenge 99.52. All right. Now we actually come down here and then we rally back up. All right. So you have a 79% level there. And then we move down. Okay. Now, if you want to just trade off the 4-hour chart, look at the 4-hour entry. This candle here, this outside candle, where we close back below the resistance level. To me, my 4-hour entry is the break of a candlestick low. But if I was looking at 4-hour information here, that closing back below that level may be enough to start to, especially when it's an outside candle. All right, the close on that candle will probably be enough to say, okay, maybe we are now reversing on the 4-hour chart down. So an entry, a good entry would be, okay, when I close below that level, there's your entry, put your stop above the high. Okay, that's how you could execute on the 4-hour chart. You could have looked for 7% retracement from that drop down. Okay, doesn't come up to 79% level. So if you were trading a 79% failure there, you wouldn't have gotten in because it doesn't come up. Cameron asked me about the 4-hour entry. In general terms, the 4-hour entry is a break of the candle, but I'm just further adding some extra value there that you could take forward. Generally, the entry would be the break of the 4-hour candle. But the reason why I'm saying take it there on the close is if you're trading the break of the candle, it's a long way down. All right, so you're giving a lot more of the market away before you're getting in. All right, because then, you know, you're entering here and your stop's above here. It's like 85 pips. So if I was just looking at the 4-hour chart for any kind of confirmation and clue that maybe I wanted to trade down, just that close below that level would probably be sufficient. So it's not a true 4-hour entry as per the webinar. As per the webinar, you trade the candlestick below, okay? All right, so there was a couple of ways you could have executed there. I just executed at the level with a 100 pip stop. Okay, I did a very simple entry. All right, now when we revisit the level, if you just traded the level, you were wrong because price moves up, okay, to a higher level. Now, if you traded this area as a level with a 100 pip stop above, that's working out for you at the moment. Okay. There was some other structure to look at on the 4-hour chart. Of course, from a day chart perspective on the euro dollar here, we're looking at the 79% fib and this daily resistance level here. All right, let me just get rid of that. But let's just look at this level of resistance, and then let's drop down to the 4-hour chart and look at structure. All right, and I might just have to move it over. So where's some structure here? See this consolidation period? So we have an area of consolidation here. Now, ultimately what happens is price comes back to previous structure. It tries to break above that structure and it can't. So we get a false break of consolidation structure here, okay? That's what's going on. All right. So when you're looking at the potential of a false break of structure over here, once we move back below the structure, you have to then determine when are you going to determine that, okay, we are false breaking and moving back below. I got a question coming from Bob. Let me just read it. All right, so Bob, back on that area that I was talking about here, you're asking me how many 4-hour candles would you need to see going the same way to convince you that it's likely to continue? Well, what I was discussing here was that close of that candle, the fact that it's closing back below my resistance level. All right, so it's not how many candles, it's what the candle's telling me. Because this candle here, if you look at the candles here, it's an outside candle. It tries to go up higher, it can't, then it gets sold off. So it's an outside candle to the previous one, and it closes below the level. All right, so it's wanting to move back below the base of this structure here. So even though we've got a weekly resistance level, it's also a base of structure. Same structure that I'm discussing now further to the right hand side of the chart. So in this it's not how many candles, it's what that candle tells me. It's an outside reversal candle to the previous one, and it closes back below the structure and the resistance. So it's the close below that's telling me, okay, we've probably failed. It's not how many candles. So I'm not really looking at how many candles, I'm looking at what the candle's telling me. It's outside reversal. So it's, at one point, this candle was full on blue. Okay. But obviously by the close of the candle, it's very negative and it's outside reversing. That's the thing that's telling me, okay, maybe I need to do something at the close of that candle if I want to trade down the chart. All right, because if I keep waiting longer for more information, price might be another 50 pips down the chart on the next candle. So it's just that one candle. It's an outside reversal negative candle that closes back below the resistance level. All right. So we actually fail. This consolidation was still there when we came up here. So we actually fail at the base of it, which is weekly resistance. Over here, we actually false break the area. Now, something that here, when I'm looking at the 4-hour candles, that tells me it's a false break because we obviously sell heavily back down. But looking at once that candle's closed there, that has already told you that we false broke that area, and you should be getting ready to look for an opportunity to trade the other way. Now, what I see is that the next 4-hour candle comes up and actually tries to retest resistance and fails. So it rallies up and fails. So the true reality, if you're looking at a lower time frame, you should be dragging your fib from that high down to that candle low, like so. Could have been doing that on the 15-minute chart. So this was just late last 1 or 2 days in the last of the month over here. So the actual low was there before the movement back up. Now what I would have been doing was looking at this, looking for price to come up to hit resistance, and look, and you know, does my fib level line up with my resistance? So the 62 fib lines up with resistance here. All right, so what I would have been doing if I was trading this live, have my fib from high to low, looking to see if price will bounce back up to retest that area, and I can see I've got my 62 level and the resistance there. So I would have been looking in that area to trade. Now, it doesn't quite get there. So this is one of those times where whilst you're looking for price maybe to come back up and rally and fail at the level, it doesn't quite get there. So if you don't do something else, well, you just don't get in. You know, if I've got an order there to get in there at this time, it doesn't quite meet me, doesn't get me in. All right. So maybe I wouldn't have gotten in there. Well, I wouldn't have gotten there for sure if I had an order sitting there. I wasn't trading that level at the time, but if I was looking to trade that level like that, that's the way you should have been looking to trade it. Trade the retest now, because the market's clearly told you that it's broken back below. The retest, though, it doesn't quite test it. So that would just be a very unfortunate, frustrating period of time where you would have gone, geez, I missed getting in there by 6 pips. And of course, the fact that you have missed getting in, when we go back to the 4-hour chart, is it has been trading down ever since, you know. So it is good just to watch these levels, you know, and make, you know, if you actually look at the 15-minute chart, we go back to the 15-minute chart in that area at the time, it does actually do a retest in that area as it starts to move below. See how it comes below? what does price do? Comes up, and then like 1, 2, 3, 4 candles down the 50-minute chart, it only trades at the level before then further dropping down, but then doesn't come back up to trade at the same level the next time. All right, so as you're seeing the 50-minute chart breaking down here, and it breaks underneath probably 20 pips. There we go, 22 pips. You know, if it comes back up to test that level, that's the time as well to look to trade at that level, stop above the high here. All right. If May telling me a sell limit order would not have hit. Yeah, no, it wouldn't hit. On that retest up here, it doesn't hit, so you wouldn't get in. That, you know, so if you were trading that, if you're trading that fib, 62 with the resistance there, if you're trading the area there on the retest, you don't get in. If you're looking on the 50-minute chart purely as a move below and a retest here, you could have traded, stop above the high, but on the larger retest, it doesn't test, so you can't get in. So you would miss out. All right. So I'm not trying to say that you would have gotten in. You definitely do miss out. Cameron, if you're doing a 4-hour entry, do I still check the 15? No, I'm doing either 4-hour entry or 15. So if you're doing a 4-hour entry, you're just waiting for the 4-hour candle to finish, and then you're just assessing on the 4-hour. All right. There's not really a 4-hour entry here. For me, if I was looking at this as a 4-hour entry, I would have been looking here. Let me just get the chart back over. Say as we come up just short of resistance on that red candle, I would have looked for a break of that candle for a 4-hour entry. All right. But then we break above. So this would have been the point where I've been looking for a 4-hour entry at that resistance level. All right, Alif May, you're asking me, it appears another retest of a broken level could happen. I'm not quite sure what you're talking about. This area hasn't, that was the area there that I was just discussing on the 15-minute chart where we failed the retest just. All right. So any more questions on that area? So you could have gotten in on the 15-minute chart. You could have traded that area as a 100-pip stop entry. That would have worked well. So there's varying ways that you can try and trade at a level. Or at least maybe on the 15-minute chart. In that area, as far as I can tell, there was that 50-minute retest there. But of the larger range where I drew the fib, for the 62% retracement, it never came back up to retest. It has not been up since. It has not been back since. Look right, it hasn't been back. We're at lower levels now. So there was only that one, there was that rally up there for that big run back up to retest, but it just got short. Okay. So if that's the same area that you're looking at, there was only that one larger rally back up, and we haven't been back since. Because if you look at the 4-hour chart, that's the area there. We haven't been back since. All right. Now, don't really want to talk too much about the current month. However, levels that were working last month. So when you're looking at the market and structure and levels that were working, say to be resistance the previous month, can often then be still resistance in the new month. Talked about this yesterday, 99.52. All right. We tested and failed there yesterday. So the 99.52 level, if you were just trading that as a level over the last month into the new month, it's worked twice, failed once. And if so, as long as you're structuring risk reward properly, you're going to have trades that don't work. All right. You just have to get really comfortable with that, because that's what's going to happen. You have to structure a good risk reward. So that one level over the last month and a half now, maybe, has worked 2 out of 3 times. Right. Sometimes the level can work, 3 times, 4 times in a row, but It's worked 2 out of 3. And at the moment, as we're heading into the new month, that's 79% as a pattern. We trade it as a 79% pattern for a longer term move down. The 79% held really nice. And what I want to get across to you as well is everything I'm showing you is not from the 15-minute chart, all right? Or the 1 hour chart is from the higher time frames. All the structure that I'm looking at where I'm looking for price to fail, I'm not breaking it down in terms of structure any lower than a 4-hour chart. All right. And often the 4-hour structure that formed in the previous month will be structure that we fail around in the next month, like we're showing this area here. All right. We failed up here. And I think it was you, Tony. This is not having you go at you, Tony, but I know you asked the question. Is yes, at this point, the day chart trend is up, isn't it? And you know what? Ultimately, we might be putting in another higher bottom here to go up to another higher top. But in the meantime, we've had structure failure here for a 200 pip move down. All right. So if you're looking at structure as the ultimate underlying thing that the market's trading around rather than just trend, there's often 200, 300 pip movements back the other way. But maybe the day chart structure hasn't changed 1 iota. And, here at the moment, we are sitting on some form of day support here, 98.76. Maybe that day support is going to hold now for a long-term move up. All right. But that would be going against the higher time frame trends at the moment. But, that might happen. All right. I just want to go through one more pair before we finish. I don't want to go too much long because we're almost up to the hour. And this is just taking the same simple concept on the pound dollar, which has been highly volatile. I just want to talk about a couple of levels from the previous month. Get all these other lines off. I was looking at these 2 levels last month. All right. Now, if we go to the month, that's a daily level from here, because this is where we had support and then we suddenly obviously collapsed. So I was looking at that level to be resistance on a move back up for 1. And this line here is from the monthly chart. It will be when I get the right line in, sorry, it should be 114.09, which is monthly support that got broken, that low there. All right, so monthly trend is down, okay? Should be no argument where the trend is down the monthly. And we're not looking where price is now, we're looking where, at the start of the month, we were below that level. Weekly trends, at the start of the month, we were below that level, we were in a downtrend. All right. Yes, we might have been rallying back up, but I was just looking to sell a rally within the high time trends. Okay. Now, I wasn't watching this 1350 level, first of all, in the month, because I was thinking this is coming up very strongly. The level I wanted to watch was the monthly broken level of support. Would it be resistance? First of all. Now, if you wanted to be ambitious and just trade that level as it came back up, just here with a 100 pip stop, that would have worked because price goes up to, the level is at 114.09 and the top comes in at 114.96. So it would have almost topped you out, but the 100 pip entry would have got you in for sure. And it runs down 480 pips. All right, so you would have made at least 1 to 2, 1 to 3 on that trade. You almost got stopped out, but then it works out okay for you. All right. Then we have this level here, 1350 as well. We close below that level. I just want to look in this area on the 4-hour chart. which is over here. All right. Now there's actually a 4-hour entry here. Here's the 113.50 daily resistance level. Yes, we move above, then we drop down, and then here we start to maybe hold here. Now, yes, you could have been just trading at 113.50, stop 100 pips above, that would have worked. Or for those of you that know what the 4-hour entry is, there is a 4-hour entry after price is starting to want to hold at that daily resistance level, okay? The break of that blue candle. Get my line straight. I'll just use something else to show you where the entry is. All right, the break of that blue candle, stop above the high. It only needs a 60 pip stop max, trades down 400 pips. Okay, so you really easy make 1 to 2, 1 to 3 target there, however you structure it. All right, everybody getting the idea there? We ultimately run up, we break through resistance at 13.50 and at 114.09. Then we fall back below both levels. The lower level starts active resistance, and there's your entry. You could trade at resistance or trade the break of the 4-hour candle. Either one works. The 4-hour entry actually gives you a much better risk reward opportunity than trading with a 100 pip stop, but both techniques work. Now we come back up again to retest on the 4-hour chart. If you traded that with a 100 pip stop, trades down 198 pips. So should have made something there. If you wanted to trade the level again with a 100 pip stop, it trades up about 92 pips. Doesn't stop you out. Trades down 300 approximate pips. Or I don't want to lie, 290 pips, okay? So a risk reward of 1 to 2 there. So there was 2 trades there, just, well, 3 trades. If you used a 100 pip stop here, that would have given you at least 200 pips profit. This gives you 200 pips profit. This gives you 200 pips profit. All right. Comes up again. If you traded it again, ultimately this time it fails because we've moved above. All right. This is just showing you that once you've got the major levels of support or resistance drawn in, this time it's resistance, that level can be tested countless times and offer opportunities to trade down. All right. And I'm not even getting down into lower time frames here to try and structure something tight, just showing you how to trade with a 100 pip stop at the level. It comes up here to the 114.09 level for the second test. All right. You could have traded it there with a 100 pip stop. All right. And that trades down 350 pips approximately. Well, if this would be a swing trade requiring large equity. No, you don't need large equity. You're just using a 100 pip stop. You can do that on a small account or a large account if you just trade a small lot size. You don't need a large account, you just trade a small lot size. Okay. Now, you don't need to use a 100 pip stop. You can structure it on a 15-minute chart. You can be looking in these areas on a 15-minute chart. Let's have a look at this area before I finish up. If you want a tight entry, at this area here, okay? So that's on the 13th. All right, so this is in this area here. All right, so let's say you don't want to use a 100 pip stop. What you could be doing, this is where we rush up and you think, okay, this is the failure point. Now, the first swing point break is here. So if you're using a swing point break entry, which is here, just under that swing point, stop goes above that high. You need to, even in this 50-minute chart, that's a 76 pip stop. All right. But that's what you need in volatile times. Sometimes that's what you might need to do depending on your entry point. So that's a 76 pip stop. Price does not come up here and stop you out. And obviously price moves down. Now, another way you could have entered in this area is that's actually a swing. We trade down from that high to this low, and then we swing up. You could draw a fib from that high to low. So this is, we trade up to 79% level of that range, stop above the high. So this time, structuring like that, you might need about a 25 to 30 pip stop. That might be more compatible if you maybe have a small account and you don't want to take a very small position. All right, so there were ways of getting in there. You could have a swing point break, but that was 75 pips. Up here, a 30 pip entry, trading at that level. All right, there was a swing point break here. So we run back up here. There's a swing point there. So a swing point entry on the 50-minute chart is here. Break of that swing point, stop above the high there. So that's going to cost you about a 45 pip stop. But it runs down 175 pips. All right. So there were ways of getting in tighter. This pair was very, very volatile at the time, so stops were larger. But just getting back to the idea that if you use a 100 pip stop, you need a large account. You don't really. Let's say if you've got a small account and normally you're using 20 pip stops. All right, and let's say you're trading let's say you're trading 20,000 units, all right, on a 20 pip stop. If you're going to use 100 pips, you need to trade 5 times less. So that means you're just going to trade 4,000 now. It is smaller, but as long as you're creating the same risk reward, you're going to get the same profit outcome. So it is possible to trade a small account using a 100 pip stop and still make the same risk reward and profit. It's just a positional trade rather than a short-term entry or a small stop trade, okay? All right, let me just look at the chats. So Cameron's saying, so in essence, you're looking for these entries, and if you don't see the 4-hour, you will then drop to 15 minutes, see what's happening at that time frame. Yeah, so, sometimes looking for a 4-hour, if that's not presenting, I might drop down to the 15-minute. But what I don't do is look for a 4-hour and then drop down to a 15-minute. Okay. I'm either looking for a 4-hour entry and I'm going to structure it that way. If the 4-hour entry is not presenting, I might drop down the 50-minute chart to see whether I can structure an entry on the 15-minute chart, but I'm trading one style or the other, not kind of combining both together all at the same time. Slav, saying very interesting session. Okay, thank you. It is being recorded, so if you want the recording, you can just shoot me an email for the recording. All right, so what I'm trying to do in this first Wednesday webinar of each month is, of course, we're looking at the previous month. Just showing you a lot of it is just market structure, support and resistance, market structure. How can you trade the movement back? And most of these pairs at the moment, higher time frame trend is maybe down, so looking to trade down from the major structure. Okay, and I'm using all the tools that I've already taught you. So if you're one of the guys or girls that have been to all my education webinars over the year, I've taught all this information through the year. A lot of it's been over the last maybe 3 months in these advanced series webinars where we're looking at structure. But what I'm trying to get across to you is the market is all about structure and trading in line with the higher time frame trends. And that structure is just setting up all the time. All right. So you just have to be able to see it rather than hindsight, be able to see it as it's forming through the month. And I do talk about that structure in the live webinars. So in the live webinars, I'm trying to tell you what's happening live so you can start to maybe piece it together. Of course, though, the webinar can't go over 24 hours a day and things are continue changing. So what I am seeing in the live webinar can change an hour later, but if you can start to see it yourself, you should be able to start to structure trades around the structure. All right, everybody, thank you very much. Just to let you know, coming up tomorrow, we do have more live analysis. We'll be able to cover, so that is the 3rd tomorrow. So this is this one just here in the middle. We'll be able to cover what happens from the FOMC tomorrow and what levels the market may be at, what kind of structure we're seeing, what levels we might be wanting to look at over the next few days from that event. We did obviously sell off yesterday from, I think it was positive US news at midnight last night, just recovering a little bit from that, but there's an overall, general sense of US dollar strength. So is that what's going to happen following the FOMC? We'll have to wait and see. All right, everybody. So if you've got the time, I look forward to seeing you tomorrow. Hopefully you got some value from that. If you want to watch the recording, just shoot me an email because I have recorded, and then you can, review it as many times as you want to let it, get into your head so you can look for it live as you move through the month. All right. Thanks, everyone. Have a great day wherever you are. Great evening. Stay safe. Look forward to seeing you next time.